Let's stay with that theme of commodities. Jonoathan Barratt, Managing Director of Commodity Broking Services and founder of Barratt's Bulletin, with us in Sydney. Nice to have you with us, Jonoathan, as always. Gold price, really, I mean, nothing remarkable in terms of just one session moves overnight, but certainly the fundamentals that will underpin further gains. What's your take? What's required?
Yeah, Carson, you're 100% correct. The fundamentals are certainly out there that would support the price. Obviously, as we look towards the close of the week, we got the unemployment data out on Friday, but we're actually eyeing the decision by the German High Court on the 7th of September, re the ECB intervention and whether or not it was a breach, as to perhaps one of the catalysts that could take gold back to its highs. So definitely the fundamentals are with us at the moment, and I think a breakthrough 1850 should see a good assault of that old high.
So Europe is really the main event risk right now. What might unsettle investors, though, from the US side of the fence to add upward momentum? Maybe jobs, a really bad number Friday? Well,
I think it's interesting because you get a very good number and then it's inflationary. You get a bad number, then it's a flight to quality. So either way, if the number does nothing, then I think you'll probably find that gold will probably be quite steady. But essentially, we're looking for a bit of a build, a little bit of confidence, looking for that number to back off 9.1, looking for non-farm payrolls to be up around about 75,000. So if anything, we're looking for a moderate number. But obviously with the figures these days, you never know, the volatility's certain there. I still like gold and certainly still like it on a dip.
Well, let's talk crude, whether you like the prices where they're at the moment. We've got Libya, of course, in frame, the geopolitics, but not necessarily wreaking havoc with production there. So what's your view on where we're heading next with that?
I think crude is quite interesting because if we notice that the equity prices have moved higher, crude has traded higher with it, and so some of the other commodities such as copper as well. So it's this enthusiasm or this optimism towards some form of recovery that are causing these markets to trade higher. I think it is interesting with Libya. We actually thought that the West Texas Brent spread would come in from its historic highs of about $25. That hasn't happened yet, and the reason that hasn't happened, I feel, is that Shell claimed a force majeure on 300,000 barrels of Bonny Light out of Nigeria. And because as Libya produces a light crude, then we really need to see the production of crude in Libya to be upwards of $300,000 to $400,000 before that spread can come in. So at the moment, I think crude has a chance at US 90, but I think it'll only stay there for a brief time until we can get some good follow-through optimism in terms of economic recovery.
Because that's almost the chicken and egg, isn't it? If you get that optimism on economic recovery, it's then under threat if the crude price spikes, because particularly for US consumers.
Yeah, you're dead right, but I think one of the keys here, Carson, is that if it starts to trade to those areas which are inflection points towards demand, and that's obviously US upwards of 100, then I think it becomes an issue. I'm very comfortable for the crude price to be an 85, 95 handle for the next month or so, and obviously 85 and below is cheap, 95 and above is expensive. I think the key is for it to be relatively stable within that range.
Well, the stability of copper, meanwhile, China, another snap view today, will get an important one on manufacturing demand for that commodity. I guess there's that theme playing out, and what about the strikes as well in other production regions which are key to its position?
Look, it is. Copper is in a very unique situation. When you look at the curve for copper, the demand forward is certainly very well bid. The strikes we've had across the board in Chile and Indonesia certainly going to cause more of a restriction of supply on the market. And what we're finding is that China, we'll see how the numbers go, but China's certainly been on the bid a few times. But the interesting thing at the moment with the market is they're not chasing prices yet. Okay, and I think the reason is because the reserve ratio went to an unprecedented 21.5% on Thursday. On Wednesday. So if anything there, the market's sort of unreeling in terms of how much of a demand that will soften demand. So they're not aggressive in terms of buying. But I think if you see it start to trade onwards and upwards through 420, I think you'll see them start to run for it because they really do need that copper. Because remember, they are the number one consumer there, and if they don't have it, prices can only go one way.
Well, that's indeed the case. What sort of factors will give it further support when it comes to more stimulus from the Fed? In other words, more US dollar weakness follows on that front, but also combine that with hopes that it will trigger some growth in that economy?
Well, I think that's what we're looking at. We're looking at optimism, looking at seeing how Ben Bernanke is going to manage. Remember the FOMC meeting? They've extended it for another day. So there's going to be a lot more talk on how to stimulate and what is the correct way to stimulate the economy. So if anything there, I think it's going to be more of a wait and see to see how he actually stimulates the economy. And as a result of that, I think copper prices can continue to march higher.
Is it the case also that it's running over 2 days, a more unconventional approach might be employed because they know how to roll out QE1, QE2, there's really no need to deliberate on the process there, but it would suggest, would it not, a more nuanced and a different tack to take?
Oh, look, I think they have to have a different tact. QE3, in my mind, would just be madness. Just look at the PPI and inflation numbers. They're all starting to pick up. So I think we're on the road to recovery. And you've got to be very, very careful as to whether you overstimulate, because then interest rates themselves can only go one way, higher, and that'll further cut off. So I think we're in a very precarious position. And I think that the right process is to do nothing but continue to be on the sidelines. And maybe there's a little bit more fiscal stimulus in there somewhere to placate the market that really wants a QE3. But I think the best form of approach is just to stand on the sideline and monitor it.
Let's just switch, Jonoathan, because time's almost against us, and talk about Mother Nature, not just in the United States, but right here at home, and the pass-through on wheat prices. Is this looking to perhaps just bring them off their highs?
Look, I think it will. I think it will a little bit. Remember, we're now revised some of our forecasts. 24 million tonnes for the year is what we're looking for, and I think we did need this rain. There's no doubt about it. And I think when I hear from our guys up on the land further up north that it's starting to look a little bit better. There's still a bit of a concern, but the rain we've certainly had is certainly going to ease some expectations that this crop could be another bumper one upwards, as I said, that 24 million. So fingers crossed, I think we get a little bit more rain, and that'll certainly help out the guys on the land.
Jonoathan, put so well, and we've covered many bases this morning. Thank you. Have a great day.